Today on the CEO Barbecue, we're looking for, really all kinds of metals from nickel through copper and platinum and gold, all the way up to uranium and all across Canada too, together with transition metals. If you want a bullet point summary of this and all the other CEO barbecues in your inbox once a week, go to resourcetalks.com and subscribe to our free newsletter. Now, although the company you're about to hear from has not paid us for the production of this interview, you should still not treat this video as research. Research is conducted by reading the company's official filings, which you can find on setterplus.ca. In any case, please only watch this if you absolutely know what you're doing. This interview is intended only for experienced junior mining speculators because mineral exploration, development, and mining is an extremely tough business where failure is the norm and should be the expectation. This is going to be a conversation that is general and impersonal in nature, and it is also going to contain forward-looking statements. I am not a licensed financial advisor, and my business sells content-producing services, which also makes me biased. Although this company has not paid for the production of this interview, it doesn't mean they won't become a client in the future. They might. So before continuing on, please talk to an independent investment advisor with a good long-term track record because your capital might be at risk. If you're not 100% sure you understand 100% of the disclaimers I just showed you, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said therein. That all said, Transition Metals is listed as XTM on the TSX Ventures Exchange, where over the last 3 months, the average volume has been about 185,000 shares. The stock's 52-week high is 9 cents and its 52-week low is 2.5 cents. With a market cap of just about 3.5 million Canadian dollars and 71.5 million shares outstanding, today this is a 5-cent stock with a 50 and a 200-day moving average at respectively 4.2 and 4.9 cents, which means the stock is now trading above both of them. On top of the 71.5 million shares outstanding, the presentation says that there are 13.3 million dilutive securities, but if I'm not mistaken, about 5.2 million of those were warrants that just expired without being exercised. So there are really only about 5.4 million options outstanding at various exercise prices between 6, 7, as well as 15.5 cents. And there are also some RSUs and DSUs on top of that for a total of about 8 million dilutive securities, which means the number of fully diluted shares is about 80 million. This means an increase of about 11% could be expected if all dilutive securities get exercised, which would then result in about a 10% ownership dilution if, and that's always a big if, but if all dilutive securities get exercised. And of course, none of this accounts for potential dilution down the road, which is not unlikely given that this is a pre-revenue company that operates in what is a very capital intensive industry. Talking about capital, I'll now go through their most recent financial statement, which shows me the numbers as of February 28, 2025. At the time, the company had in total $1 million in current assets, the majority of which was in marketable securities, mostly in the form of Forum, West, Kitikmeot, and SPC Nickel shares, but there are many other names on their books as well, as you can probably see on your screen right now. And the reason behind this will become clear here in a minute. There was about $145,000 in cash at the time, some short-term investments, some tax receivables, and some prepaid expenses on top of that as well to account for that $1 million. On the liability side of the balance sheet, I only see account payables and accrued liabilities, which are of course current liabilities to the tune of $300,000 and thus no long-term debt. Moving on to the P&L, Transition Metals recorded $885,000 in expenses for the 6-month period in total, but that includes some share-based compensation and depreciations as well. So the actual out-of-pocket cost was closer to $870,000. About 72% of that money was spent on exploration and evaluation, and thus 28% was spent on running the company. This means the average monthly G&A over the last reported 6 months was about 40,000 Canadian dollars, or a total of $240,000. About half of that, or 52% of that money, was spent on consulting and professional fees combined, with the rest being made up by investor relations, office, and rent. As for the exploration expenses, those sat at about $630,000, and note 9 of the financial statement tells us that over 70% of that money was spent on Saturday night, which is not a disco club. It's actually Transition Metals' flagship property, which I'll tell you more about in a minute. This is where I normally give you the exploration to administration ratio, as well as the drilling to marketing ratio, but I already kind of gave you the former. It's 72% to 28%, and the latter is not broken down in their financials. So hopefully we'll figure out what the $460,000 at Saturday night was spent on, mostly later on in the conversation. Before we get into the conversation, though, just briefly, Transition Metals is not a regular Explorico. They are actually a prospect generator that has an exploration arm. And although they have over 20 properties, Saturday night is where the majority of the focus has been for them recently. That is a 100% owned asset. It's located in Thunder Bay, Ontario, where 3 holes have gone through a 450-meter thick layered gabbro complex, which the company assumes is the up-dip analog to Glencore's Sunday Lake discovery. So maybe now you can see where the name of the property came from as well. Grades here have not yet been what they'd hoped for, or not what they'd hoped would come out of the ground yet. So hopefully an update on future and current exploration efforts there later on in the conversation, as well as, of course, discussion on liquidity, financings, earning agreements, claims, uranium, and much more. But for this to actually become a conversation, I might have to consider shutting up already. And Scott, giving you the word here. But first of all, thank you for being here with me today.
Oh, it's great to be here. Thanks very much for having me.
The pleasure is all mine. But since this is your first time on the barbecue, we'll have to kick it off with a smell test here in a second. But just before we do that, actually, I can open up the presentation and I can see a graph on slide 4 of the presentation that says that your properties and the securities and the milestone payments on top of the cash, the goodwill, and the royalties that you own, that would equal about $18 million in value. But the market is only giving you 3.6 million for that. And looking at, a multi-year chart going back a couple of years, it doesn't look like you've traded anywhere close to that valuation for a while. So how come? What's the catch? What am I missing here?
Well, there's obviously a disconnect between the asset value we have in the company that we can measure, and we measure in conservative way, and how the market perceives us. I mean, cash is cash, and securities are relatively measurable to market. Milestone payments, for example, are real cash payments that we could receive in the future, which we discount about 85%. And royalties are based on a royalty deal we did a few years ago with Nova Royalties, now Metalla, which gave us a chart or an understanding of what royalties could be worth. The real sort of subjective area is when you get into properties, and anybody who's dealt with exploration properties know that they're hard to value. Generally, a lot of the value is speculative. So how we do measure that is simply what we will receive in the next year in terms of an option payment, or what we would expect to receive. So we've kept that fairly conservative in that measure. Now, the market doesn't give us that value, and generally we trade for the value of just our cash and our securities. And I think if you charted that out over at least the last 12 or 18 months, that's what you would see. It's a skittish market as over the last number of months. It's improving now, but certainly uncertainty in world economics has kept discretionary funds that people have, and often in our type of company, it's retail dollars that come into play, and that has resulted in people not wanting to invest in the company. That seems to be changing a little bit. One of the concepts when I think about a retail investor coming into play in the market, what would they look at? In terms of going to some of the metrics that you disclosed in your preamble. You'd go to the financial statements, you'd see how they're spending their money, you'd see how how much they're spending on G&A, for example. You'd be able to kind of work out how many liabilities they have, and that's a pretty simple thing to do. You'd want to look at the people and understand what the quality of management is that's going to look after your investment. And those are two easy things to do. The third thing that a retail investor might do is go in and then look at the projects, right? And when they come into a company like ours, there's a quite a bit of work to do to really ascertain what the value of those properties are or what those projects are. And so it may be a little discouraging for an average retail investor to come in. Now, sophisticated investors are a little bit different. We don't have a lot of institutional investment in these companies that run this sort of business model. We're not raising a lot of money year over year. So institutions, brokerage firms, for example, that are looking for commissions are not going to be as interested in a company like ours. For example, since the start of the company, we took the company public in 2011. We've only ever raised um, just under $11 million at an average price of 17 cents per share, and and we have seen and we have spent, in terms of exploration dollars, somewhere in the neighborhood of about $50 million in exploration in the ground. And so there's a real good model here for a sustainable business in a very high risk environment. And and until we start to see more interest in the front end exploration, the market cap has had to suffer a little bit. So I think that might answer some of your questions. It's a retail play. It's a hard thing for an individual to value. They're looking at specific assets. If they go to a traditional junior explorer, they tend to tend to be an easier assessment, a single project that they need to look at. Although it's higher risk, it may be an easier opportunity for them to make an investment. I think that's maybe the disconnect. We've also seen Canada. In Canada, the front end exploration dollars, the international dollars coming into Canada really dry up over the last 10 years for a number of reasons. The markets have been uncertain. There's been some volatility in the markets and uncertainty in worldwide economics. We've had what I would say a more left agenda in our government, which has really not professed to the international investor that this is a good place to put your dollars. But overall, we've got a vision ahead of us that should change that and get this thing moving. And some of the metrics that, or some of the information that you've already disclosed has been improved upon significantly. And I'm looking forward to talking about that a little bit more here today.
Well, there's loads to touch upon there in that answer, and hopefully we'll be able to get to through it all. But and especially as to how do you plan on, realizing that value essentially later down the road. But as the barbecue is heating up, I'll have to start off with the man running the company himself first. Who are you, and why do you think you're the right man for the job?
Yeah, well, I mean, my background has been in the mining. I've been in the mining industry, in the exploration sector of the mining industry since I graduated from university in 1985. So now I've dated myself. And I started my career with Falconbridge Limited, that became Xstrata Nickel. Worked for Xstrata Nickel for a period of time prior to deciding to leave that company and start my own companies. During my tenure at Falconbridge and Xstrata, I worked my way up to, well, I guess, middle management. I was in charge of the exploration investment in Sudbury, kind of a $30 million a year exploration budget. We had some great success during that time, and were able to bring a number of resources into play. And in fact, our team discovered the Nickel Rim South project or mine, which awarded us the Prospector of the Year for Canada. So we've been recognized by awards, and subsequent to that, our efforts have also for our work at Sunday Lake has provided us with the Ontario Discoverers of the Year in 2014. So recognized as a technically sound individual and a team leader of a group of sound technical people that are able to put shiny rocks in the box and discover ore bodies. We've done it in the past. We continue to have success in discovering new opportunities. And so that's one element of it. Now, when I left Xstrata, I teamed up with a mentor of mine who was one of the founders of Haywood Securities, David Elliott. And David and I have kind of worked to build out these companies. So that's been what that's allowed me to do is really develop my skill in the financial markets as well as the business end of running a junior company. I've got great mentorship continues to come from David. Being able to put a substantial board together, which provides great mentorship as well. And one of the skill sets I think I have is through my career, I've been able to attract some of the industry's best to join me and align with me in what I'm trying to do. And the team that we have is exceptional in my mind, technically strong, and with recognized deliverables through their careers as well. So summing that up, I've got a pedigree of discoveries. I've worked from my way up from field geologist, living in tents in the remote parts of Canada, to be able to run a large exploration program for a major company that involved involvement in all aspects of the mining business, to be honest. And then we're able to kind of step out, become an entrepreneur, and develop companies that have been sustainable for well over a decade.
There's lots to discuss there again as well. Have you returned money to shareholders since the company has existed for over a decade? It's almost 15 years now, I suppose. It's going to be 15 years next year. But again, looking at the share price, it just continually has gone down, and you could argue that it is due to the bull market. But in the meantime, as a prospect generator, you've had opportunity to return money to shareholders, I assume. So have you done that?
Yeah, I mean, I think the market, if you go back through time, you can see, particularly when we were drilling Sunday Lake, there was many opportunities where stock performed strongly. I think our highest stock price was in that 60-cent range. So there has been opportunities for investors to realize gain on the market. In addition, we've provided our shareholders with two separate share dividends, which have resulted in them being able to exercise those in the market or sell those in the market to bring back money. That's very rare that a small company like this is able to provide dividends, but those have been done in the past, and the latest one would have been in I think 2020. Where every shareholder of Transition Metals received a share of SPC nickel.
And that's something I suppose I hope we'll touch upon later as well, because you still have those shares on your books. So I'm interested into what you're going to be doing with it. Do you currently personally hold any other executive board positions with other companies though?
I do. So, if I had to list those, my main job is Transition Metals Corporation, and I still am a part-time executive director of SPC Nickel, which doesn't take up much of my time, but does. But I do a day or so a week, a day or so a month of activity with them. I am a director of Canadian Gold Miner, which is another one of our spinouts. And I'm a director on a private company in the Southeast States called Carolina Gold Resources. And currently, I am a director on Tesoro Minerals and the interim CEO, which is a Peruvian company, which is fairly inactive, has been inactive for the last 4 or 5 years.
So how much of your time would you say goes toward transition?
In the neighborhood of 80% of my time.
Okay. What's the current insider ownership, and how much of the company do you personally own?
Well, currently I have about 3.3 or 3.5 million shares. So whatever that works out in terms of percentage, and
5%,
something like that.
Yeah.
And in terms of insiders, we're in that. If you take the pure insiders, we're in that sort of 10% range in terms of in transition metals. One of the principals in the company, or one of the original principals in the company, was David Elliott, who is now not an insider any longer. His ownership is his personal ownership is below 10%, but of course he's got a retail book that probably brings that up higher than 10.
Mm.
But overall, the insider ownership is in and around that 10% range.
Those 3.5 million shares here, Scott, how did you get those shares? Is it founder shares bought in the open market and financings, or how did that work?
Yeah. So basically, I have paid for all of my stock. The initial founder shares were, I think, at 5 cents, if I remember. And then every single financing I am participating in and have participated in. I have bought stock on the open market at times, but that's not a significant piece. But I have been into the market when I can and when it's suitable. As a project generator, you have a lot of projects out there, and there's often the times when you are free to trade are limited. But certainly we have. I've never sold a share, and I've participated in every financing at the financing rate, and that's how I've accumulated my position.
So the average price of those 3.5 million shares, that would be higher than the current market price then.
Absolutely. Yeah.
Okay. Yeah.
Yeah.
Why
Absolutely.
why haven't you then, and touches upon what you just said there, but why haven't you averaged down over time? Again, if you believe the value is 18 million, trades for 3.5, you as an insider understanding that value, why not buy in the open market?
I have bought in the open market. I mean, as I mentioned earlier, the windows of my ability to finance have been limited. I've had with many projects being active in one time or another. We're privy to information that the public isn't. We've been working on a deal recently for probably 4 months now, which we hope should close today. And that has also limited my ability to get into the market. I am involved in a number of companies as well. So as I continue to put money into these companies, I haven't been able to take any money out. I haven't been paid on this particular company since about September of last year. So it's there's some personal reasons, but really it's just the ability to buy it. Has limited my ability to go into the market and buy stock.
So essentially, transition owes you for almost a year of salary right now. How are you going to take that? Are you going to wait for some liquidity to come into for some money to come into the company, or are you going to take it in shares? What are you thinking?
Yeah, I'm going to talk to my board and see what the best thing is for us. I'm happy to take shares for a portion of that for sure.
Let's maybe move on to the rest of the team here as well, given the somewhat, correct me if I'm wrong, but hybrid model of an Explorco / prospect generator with 25 projects across the country, if I have that correctly. What does your technical team look like in order to manage all those projects? And yeah, talk to me more about them.
Yeah, sure. So the 25 number that you picked out of the presentation is projects and royalties, I think. At the time of that presentation that you have, we had 18 projects. As of today, we're down to about 16 after the end of the day today, I presume. In terms of the other team members, we have a small hunting team that have been working together for many years. Greg Collins is my key partner in the company. Greg and I go back to the early 90s where we worked together at Falconbridge. He entered into and he's the technical bulldog in the company. I like to say he's the bulldozer that keeps things moving ahead in low gear, and he is extremely technically savvy. And his biggest smiles that he has are when he's in the field, rain or shine. He wants to be out there. So Greg and I worked together from the early 90s. He left Falconbridge to join Crowflight, where he was the VP of exploration there and helped build the Bucko operation in Manitoba. prior to coming back and joining me after I had left Falconbridge as our COO. His background has been worldwide exploration for Falconbridge, and then back into domestic exploration with Crowflight. Um, so Greg and I have a long storied history together. We're very good friends, partners, and work very, very well together. Our senior geologist, Ben Williams, he came into our company in the neighborhood of 8 or 9 years ago, I would think. He's also a technically sound, well-organized project manager. He has a master's in geology, is very academically inclined, but very, very astute a project implementer. Um, Sarah Reese is our youngest geologist. She has been with us for about 4 years. I am continually impressed with her ability to understand economic models, her ability to put reports together. Just a real great up and coming young geologist that's really added a lot to our team. On the consulting side, we have two consultants that help us out. Our principal geologist is Tom Hart. Tom Hart, I like to say he stood on every outcrop in Ontario, but again, very academically inclined individual. He is on a casual basis with us and helps mentor our young geologists. He helps to keep us at the forefront of technology and is highly organized in being able to maintain our project maintenance and our projects. The other individual that's on a part-time basis is Bill Stormont, and Bill is our helps us on the corp dev side. In fact, his main role is to help us liquidate and get value out of idle assets that we have in the company. He has a financial markets background and is well in tune. Living in Vancouver, he's well in tune with the junior companies, and he's a great guy to do outreach for us from the telephone. Great cold caller, and has been very helpful over the last couple of years for us. So that's generally the team that's active. On the board side, Jason Marks came out of TD Bank, is involved in an investment company called Metric right now, investment fund. He's a financial wizard and chair of our audit committee. Brian Montgomery is a lawyer in Northern Ontario who helped build Northern Ontario's largest legal firm called Weaver Simmons. He's now out on his own and provides us with legal kind of mentoring. Tom Atkins is a junior company CEO. He's currently CEO of Mammoth Resources. He was worked for CIBC World Markets for a while prior to getting into the junior scene, and helps us as giving us insight into running a junior company. And then we have two younger, aggressive young directors. Ashley Kerwin is the CEO of Oryx Geoscience, which is a highly successful consulting firm, geoscience consulting firm across Canada with about 80 employees, 3 offices. She's a founder of that company and very well connected with the junior markets and mining companies. She provides a good network for us, and another rising star in the industry is Jordan Black, who's the CEO of Ramp Metals, and he's had quite the storied last few months running that company in northern Saskatchewan. He brings a new connection to new investors to us. He's well known on the street, well liked on the street, and has done a really good job with ramp. So that's the team.
That's a very comprehensive overview, and I appreciate you going in depth on it. Do any of them, or you personally, hold a royalty on any of the projects that you have that are, again, not held by Transition itself, but personally by any of the insiders?
No.
Good, clean answer. That's how I like it.
Yeah.
What about the services? Do any of the insiders provide services to the company outside of your regular, management activities? I'm talking helicopter, camp support, something else like marketing, anything like that.
No.
Okay.
No. There's none of the insiders have any kind of contracts with the company. The only ones that do are myself and Greg. I didn't mention our CFO, who's Carmelo Morelli, who runs basically a accounting shop, and he has a contract with us as well.
Mm-hmm. Again, clean answer. That's how I like it. I'm still staying on the topic of, well, the same topic, and still within our smell test before we get into the barbecue, talking about incentives, because you're a bit of a different company again relative to most I speak to. How do you measure success, and how is executive compensation going to be structured and determined to reflect that success? As in, what are your KPIs going to be tied to? When do you reward your insiders?
Yeah, so none of our board is compensated other than with options. I would say that our consulting fee rates for myself and Greg are on the lower quartile, and we hold options and RSUs and DSUs, and that's really how we view that we're going to have any personal wealth generation is through the holding of our stock options and our DSUs essentially. In terms of how we do have a compensation committee that reflects on what individuals should be paid and whether or not they should be compensated with options and other convertible securities. And when we have done those in the past, it's always been either following a financing or following the AGM. And how that's because the company hasn't performed, we haven't issued them in a long time. So in terms of specific metrics, my view of success is discovery. And how do you say what is a discovery? Well, discovery in my mind is at least two holes and hopefully three holes that have or grade over mineable widths that demonstrate continuity. And we've had that with Sunday Lake. We're hoping to have that at Saturday night, and we're hoping to have that at Pike Warden, which you didn't allude to in your preamble, which we will get to, and we've done that as well at our Galganda project. So those are our measures. In terms of, I think your question was more about how do we decide when we issue options and so on, and those are really done when the company has demonstrated success through a financing and the share price is is uh, is is really kind of marked to market.
Yep, that's again another fair point. I like how you put it. What a discovery really is. I know that different companies have different definitions, and sometimes it's used as a bit of a marketing term. So I like the way you put it, and I would agree with that as well. We'll definitely talk about Pike Warden here in a second. And this actually might be a good segue into talking specifically about the business plan here for transition, because again, you say $18 million in value, but just a 3 million or 3.6 million market cap. What's your plan for realizing that value and making the current shareholders money on the stock?
Yeah. So as I mentioned to you before we started the interview, Antonio, we have secured a sale agreement of one of our assets, which will cash up the company. And so we're not going to have to go out and raise money at these low levels to and dilute the shareholders. I mean, one thing we have done, if anything that we've done really well, it's we've managed our capital structure, having only 71 million shares outstanding since the dawn of time, without any consolidations, And it would have been a shame in this down market to have to go out and really kind of dilute those shareholders that have been with us so long. So we're happy about that. And now how we're going to employ that is really to bring to the market a discovery. We're focused on a couple of projects right now for this year, and those include one you alluded to, which was Saturday Night, as well as another one which is called Pike Warden, and we can talk about those a little bit more. There's two others in the basket which we have got focus for next year, which is Highland Gold in Nova Scotia and our Galganda project in Ontario. Um, so going forward, when we get to it today, we'll talk a bit about Pike Warden. That's the project that we will start implementing this summer. We've worked 3 years on this project to boil it down to a really significant target. We're very bullish on that target. We will start with geophysics in July here, more geophysics in July, and we hope to drill that this year to be able to kind of bring a brand new discovery to the market. And we'll talk about that, I'm sure, a little bit more. And you know how the market responds to it will be determined on the results that we present, which is one of the better targets that I've seen in a long, long time. The other one is Saturday Night. We talked about that. We will focus on that as well. And that is another PGM opportunity, very similar to other PGM opportunities in the Mid-Continental Rift area, including Sunday Lake, Clean Air Metals, Thunder Bay North project, very similar to things like Lundin's Eagle deposit and Talon's Tamarack deposit in terms of geologic model. So we've only just started on this project and we're pretty excited about it. So those are two areas that we look to bring a real value to the market. And with our influx of cash, we will also be marketing the company in a strong way with good news flow, looking to really engage marketing a marketing program within Canada, within the US, and we will consider European markets as well. But right now, the main focus is to get going with our summer program here and hopefully bring some excellent results back to the market that will realize the value of just one of our assets, right? I think when we talk about the transaction we're doing today, which unfortunately won't be announced till tomorrow, that is a good demonstration that a single asset, which we only own 50% of, for example, brings essentially our market cap value in cash to our company.
That's again, I wish I'd seen that news release so we can talk about that more in depth. Hopefully, we can do a follow-up interview and talk about that in the future, maybe. But Scott, I understand the appeal of having a diversified business model with a bit of self-funded exploration on one hand, and then some money coming in from the prospector arm, sale of an asset and everything. But how do you balance this thing long term without being essentially mediocre at both? How can you be an excellent explorer as well as an excellent prospect generator at the same time?
Yeah, I think the market has really changed in terms of its view of prospect generators. You know, at the desktop level, right? The prospect generator model is the only model that really works for early stage exploration. You know, if you go back and you look at the traditional junior, they have one asset, a high risk asset, and we're talking about early stage exploration. One high risk asset. They dilute the company significantly to evaluate that asset, and with a 1 in 3,000 chance of success, they almost always are not successful. They then retool at some point, consolidate their stock, and they come up with another project and they move that forward. Eventually, there's money to be made along the way. But if you take many of the traditional juniors back to time zero, they generally are losers over time. Now, what what a prospect generator does is it really creates a sustainable business where you're able to not go back to the market and continually dilute the equity. You have to sell something. You sell interest in your assets. And the market has not responded to that. It makes a lot of sense, in terms of theoretical charting, but honestly, the market hasn't responded to that. So that's why we have changed to what you described as a bit of a hybrid model. We do now have flagship projects, which right now is Pike Warden, and to some level Saturday Night, and we will be trying to move those forward. But we do have a cushion that we can fall back on, which are a bundle of projects which can bring revenue into the company, but also new opportunities to move to if we're not successful. We are only putting our money into we prioritize our projects, and we put our money into the best one out there. And there's a lot of things that go into assessing that, which is the technical merits is the highest one, of course, but there's also the social aspects of the social aspects of the opportunity, whether we're actually going to be able to do the work and deliver a deposit to the market, and also economics, right? How far, how deep, etc. So there's a process that goes into it, and we do focus on what we assess as our best projects.
Do you think you're gonna?
So to answer your question was how are we going to deliver that? How are we going to realize it? Well, we've been fairly idle over the last couple of years here while we conserve cash, not progress our projects aggressively. We can talk about Saturday Night and why we did that, but now it's time to we're seeing green shoots in the markets. We have known for quite some time that commodity markets have been strong. We've been waiting for the financial markets to catch up at the early stage exploration companies. We're seeing a lot of green shoots that's happening. We're getting a lot more calls for projects, and I think the next little while is going to be very strong for the junior companies, and we've just happened to be well positioned with good cash in the bank and some great projects to move forward. So moving from a 5 cent stock and moving that forward in a very forward-looking statement, I think the downside is very limited and the upside is substantial.
I do want to talk about Saturday Night a little bit more in depth, and we'll definitely get to it here in a second. But do you think
Yep.
you're going to have to raise capital through equity issuance to keep that plan alive, or do you think there's more opportunities to do what you're referring to, having done here, where you get money into the company through the sale of an asset or option payments or anything like that? Essentially, do you think you're going to have to raise equity again this year?
Our plan is to raise equity, but we're not going to do it unless it makes sense. We don't have to do it. If we do have a good bump in our stock from our work at Pike Warden, for example, I think a great way to fund later in the year work at Saturday Night will be to potentially do a small financing on the flow through side. We got lots of hard dollars. And if we can get that share price 10 cents and higher and get a good premium on a flow through offering, we would consider that. But right now, there's no need to. I would prefer to bring non-dilutive cash into the company. So the option is still out there to finance, but if we don't have to or we don't get the pricing that we want, we won't do it. And we'll still be able to move ahead with these projects. So I think I answered your question there.
Well, instead of issuing your own equity and selling that to the market, why not sell some of the other equity that you currently hold on the books? Is that something that you'd be interested in?
Absolutely. And in fact, that's what's kept us moving along. If you look at our Forum interest right now, for example, Forum Energy, who's had some news out the last couple of days. I mean, we've held that. We've had as much as 8.5 million shares of that company. And we've sold, we placed that into the market and brought non-dilutive revenue into the company. As with our Class 1 nickel, our Nova royalties shareholdings that we no longer have were significant in bringing non-dilutive revenue into the company. So yes, that is, I think that's a good astute assessment is, why do you hold stock in other companies rather than you know uh, rather than just focusing on your own company. And we're not out here to bring in a lot of securities. They do bring a non-dilutive cash into the company as we need it. There's two there which are still private. No, three actually that are still private that we hold. A small interest in rich copper, a significant interest in Canadian gold miner, and a pretty healthy interest in West Kitikmeot gold. So those aren't liquid right now. We're happy to sell them to an interested buyer, but right now our marketable securities are certainly available for sale into the market when the pricing's right and the volumes are there. I think over the last little while, one of the issues with monetizing these is not as well. Obviously, price has been a concern, but certainly liquidity hasn't really been available in a lot of these issues to really move a lot of the stock out.
Definitely. For most companies, for you as well. What did I say at the beginning? About 100 and somewhere in my notes here, but 180,000 shares or something about that at 5 cents. That's not a lot of money. And not a lot of money changes hands through your stock. So that's something that I also want to talk about, and we'll get to it when we talk more about marketing. But maybe we can talk a little bit more about what you've done this year with your own money. You started an exploration program on Saturday night in mid-January, and then reported the results from 2 holes in late March with, again, as far as I could read it, no major grades reported in those intervals. Where is the grade? What's going on at Saturday night?
Yeah, so Saturday Night is a PGM project in the Thunder Bay district. And we have had considerable success with our discovery at Sunday Lake, which you alluded to as a Glencore discovery, which is incorrect. It was discovered by we optioned the project from Rio Tinto, and together with our strategic alliance partner Impala Platinum Holdings out of South Africa, we made that discovery in 2013, and that's a fairly significant discovery. The distribution of the mineralized horizon is about 1,500 meters by about 600 meters in size. It gets up to 60 meters thick, and some of the intersections at that deposit include 42 meters of 5.5 grams with high grade ounce material within some of these intersections. This class of deposits is what we call early rift intrusions, which are related to the mid-continental failed rift that is centered under Lake Superior. So about 1.1 billion years ago, there was the continent tried to rift apart, and it failed, and there was a lot of magmatic activity associated with it. In fact, the voluminous Duluth deposits are all associated with a later intrusive event, a fairly passive event that resulted in those large low-grade deposits that exist in the Duluth area. It wasn't until early in this century that the early rift intrusions were first discovered, including the Eagle mine in Michigan. And these are related to a different intrusive event, which we classify as the early first rift events of that big structure. And those are much more ultramafic in nature. They are very much more smaller and more dynamically emplaced, and they all have identical geophysical signatures, identical geochemical signatures, and identical lithologies. And that expands from both sides of the rift, both sides of Lake Superior. And on our side of the deposit, our side of the lake, on the Ontario side, there's been significant discoveries made in these deposits. And right near Thunder Bay, certainly Thunder Bay North, that was discovered by Magna Minerals, and now held by Clean Air Metals. It hosts a 2.4 million ounce platinum equivalent deposit. And then our Sunday Lake, right along trend of that one. We haven't disclosed a resource for that yet, and we are in a joint venture with that with Impala Canada, wholly owned subsidiary of Impala Platinum Holdings out of South Africa. We have a 25% carried interest in that through the feasibility, and Impala Canada is the operator on that project, which has sat idle, mind you, for a number of years. We see that as a significant deposit, being I've mentioned some of the size distributions there and some of the grades we've got. And then a long trend of that, right along the same structure, we own 100% of the Saturday Night project. And this is another early rift intrusion. It is identical in every way to the lithologies we're seeing at Sunday Lake, to the geochemistry, and to the geophysical expression. We did drill a hole back into this in 2016. And at that time, we intersected some interesting mineralization, which was in the neighborhood of 4 meters of, or no, 6 meters of about a gram, which included about 4 meters no, included about half a meter of 4 grams, and that I mentioned, I'll indicate is a better discovery intersection than what we had at Sunday Lake. So once you find one of these early rift intrusions that is mineralized, you know it's going to be mineralized and it's worth exploring. To date, we decided to go back in 2025 and follow up on that intersection. We drilled a hole, just a minor step out of about 150 meters from that initial discovery hole. We intersected 14 meters of similar grade, so it was getting thicker, but the grade didn't improve. And then we initiated a major step out of about 400 meters to the south. And you've got to recognize that these are buried intrusions, so they're hard to interpret until you get some drill information. This hole failed to get to the targeted depth. As we started drilling, the intrusion got thicker and thicker. The contact dropped off. It's exactly what we want to see, and we just kind of ran out of money prior to getting to that contact area. Now, when we say we ran out of money, this hole was one of the reasons we went in and did this work is 50% of the expense was funded by the Ontario government. So although we spent in the neighborhood of $400,000 drilling these holes, it cost us. We were able to kind of get back $200,000 from the Ontario government, and we didn't want to continue to spend money without the support. We'd maxed out on the amount of money we were going to get back from the government. So that hole has remained hanging, and we think it's a great opportunity to get back into that, finish it off. We've probably got another 200 meters to go to get to the contact, and that's it. Everything's kind of coming together to look like that's the place you want to be in terms of seeing that contact drop off, seeing the individual intrusive layers getting thicker and thicker, and it looks identical to what happened at Sunday Lake as we started to drill into one of these troughs of the intrusion. So that's why I went in there. We had money to spend from the Ontario government, and we think it's a great opportunity to come up with another Sunday Lake.
So there's no involvement that Glencore has in Sunday Lake, right? They have, do they have a smelter in Sudbury? I think they might.
So Glencore has no involvement in any of these projects. What they do have is, I believe that Impala Canada sends a concentrate from their Lactazile mine to Sudbury.
That's right.
But Glencore is inactive in the area in terms of exploration.
Could it be? I mean, could there be any interest from them or anyone else for Sunday Lake, and could that mean something for Saturday Night?
Absolutely. We look at these as sister projects. We, as I mentioned, we have a minority carried interest in Sunday Lake, and Impala Canada is the operator and holds the majority interest. We would be interested in acquiring that 75% interest that they hold. Or if another party was interested, I think there's an ability to discuss that with Impala Canada, but that's really their call. Our 25% interest is certainly available to the right partner, and our ownership in Saturday Night, 100% ownership in Saturday Night would also be available for the right deal. But I think
Hmm.
that these two projects are sister projects. They should be kept together. And at Sunday Lake, unfortunately, we just have a 75% interest in that project, albeit carried. And when I do the calculation, there's been about $12 million spent at Sunday Lake, and we've been carried through that.
Hmm. You're actually already answering the question that I had. Is that Saturday Night? Would you want to keep drilling it yourself and find something that's larger and then do a deal, or would you like to
Yeah.
see a deal coming in right now?
Well, like anything, we would do a deal for the right terms. But right now, I think this is a pretty juicy opportunity for us, and we're willing to move ahead with it. But if there's the group out there, the right group out there that wants to combine it with a full Sunday Lake project, then I think that might make some sense.
Hmm. What does moving ahead mean for you? How do you follow up the exploration program? How do you follow up the drilling? Where do you go from here?
Well, this is an easy one at Saturday Night. I mean, it's a very defined target. It's a drillable target, and we've got a hole left hanging there. So the first step is obviously to complete that hole, get it down into the contact zone. We anticipate that that will be a pretty interesting hole. And based on the results of that hole, we would then move ahead with further drilling. That's what the project requires right now is more drilling. It's not rocket science. This one, it's a sill. It's consistent. It's not a lot of structural problems to deal with. It's low metamorphism, and we'll be able to kind of follow this one up very easily with further drilling.
What are your decision gates going to be here, though, as you drill this further? I mean, sort of hit, pause, kill, move on. How are those tied to results? What are you really looking for?
Well, to tell you the truth, I don't have a clear answer on that one, but I think we need to see mineralization, shiny rocks in the box, as we say, from this next drill hole. I think that doesn't kill the project if we don't, but certainly that would really get us excited if we get a good intersection there, and that would be a positive decision point to move forward aggressively. In terms of additional drilling, if it's unsuccessful, which as a forward-looking statement, I anticipate that we're going to have some success with that one. I've been around this block a few times, but without success in that hole, I think that the project still warrants additional drilling in the neighborhood of 2 to 3 more holes. And at that level, if they were all unsuccessful, I think that's an easy decision to not spend any more money.
Hmm. What about timing? What are you thinking in terms of timing? When do you go back? When's the market going to hear more about that?
Yeah, I think platinum and palladium have been moving. If you followed that, I see some good supply restrictions going forward. I'm pretty bullish that platinum in particular will be strong over the next little while, and we're going to be busy with our Pike Warden project through the summer and perhaps in the early fall. This would be a great project to get in later in the year to be able to bring some intersections in and some good news flow in towards the later part of the year. So this one and again, we would look to apply to the Ontario government to support our work here. They've been excellent. The OJEP project program in Ontario has been successful in my mind. We've taken advantage of that program through our various projects to the tune of over $1 million that has come back to us from the Ontario government. And this project would qualify again. It's a matter of applying for that and getting the work done before February, middle of February of next year. So essentially, that will be the process. Apply for the OJEP project, work our Pike Warden project through the summer, and look to get going on this one again later in the year.
Hmm. How's the First Nation relationships here? Is there anything else that you have to get in terms of permits or anything else signed before you can finish that work?
Yeah, for sure. Like, we're engaged with the Fort Williams First Nation. There are other uh, indigenous groups that have the area's traditional lands. We're in communications with them, but our closest relationship is with Fort Williams. We keep them abreast of everything we do there. We have a good relationship with them, and they are supportive of the activities that we've done to date. We met with the band and council prior to doing this last program. We kept them engaged throughout the program and gave them a follow-up call thereafter. So everything is working well with the key First Nation in the area.
Hmm. Other permits, government or provincial, or is everything else taken care of?
Yeah, so our permits are in place. We can move ahead with this one without additional permitting. I can't remember exactly how many more meters we have on that permit, but we're in good nick for this year
Hmm.
without having to go back and reissue or reapply for a permit.
Let's do talk about Pike Warden then here. In that case, you've
Yeah.
got what 150,000 Canadian cash payment coming up, a million shares, and you've got a million Canadian work commitment by June of 2026 to get that 100% of it. Are you still planning on doing that?
Yeah.
Hmm.
So I don't think we have 150,000 still to pay, but
Okay.
maybe in cash and shares. But we still need to spend about $300,000 on that project to vest our interest, and and this that will be done. We have every reason to want to do that, and but it will require some drilling.
Right. Well, talk to me. I do want to know exactly how you're going to follow it up. But maybe talk to me about the thesis here first, though, because you're talking about robust epithermal and porphyry signatures here at Pike Warden.
Yeah.
This is 26 sections, and a couple of trace elements. Essentially, you have some grab samples and stuff like that. How'd you come up with this thesis? Where is this stemming from?
So Pike Warden was brought to us by a young geologist prospector in the Yukon named Ryan Berkey, who we had sponsored a what we call the next gen competition at the PDAC, where we invite university teams of university students to present their projects or exploration ideas to a sort of a lion's den type format of junior CEOs. And Ryan had won the competition, and as a result, had gotten some money out of that from the competition, which he employed into this area based on this project. And we saw all the sort of early stage metrics of a mineralizing system, right, that we wanted to follow up on. So we're able to do a deal with Ryan to be able to get in there and take on this project. And over the course of 3 years, we've done a significant amount of work, which has included a lot of prospecting and mapping, and that's resulted in 25 polymetallic showings. A good example is close to 50 grams gold, 11,000 grams silver, 7% copper, and 2% moly. So the mineralized kind of nature of the project is highly interesting in itself. In terms of the overall context of the area, we're sitting on the edge of the Bennett Lake caldera complex, which has prepared the area structurally for the emplacement of mineralization, and and all the further work we've done, which has included lidar work, structural mapping, magnetic airborne work, and multispectral alteration assessments, have all kind of continued to point to the fact that we're into a significant mineralizing system on a large scale. Uh, so, in terms of what those targets are, in the highlands, which are the upper peaks that we where we have explored in the high alpine, we have a number of epithermal uh, mineralized showings. Probably the best one is the ERT zone, which we put 3 drill holes into about 3 years ago, resulting in 3 holes measuring 20 meters of 100 gram silver material. So real good mineralization that we've now been able to trace out for about 800 meters. And that sits up in the upper highlands. You get down into the valleys, the glacial valleys below the highlands, you start getting into much more um, porphyritic, porphyry type, I should say, porphyry type alteration and mineralization and geophysical expression. In terms of what I mean by that is we go from more sericitic alteration. You know, as we get down into the valley, particularly one location, the alteration becomes highly potassic. Secondary biotite being starting to occur. We're starting to see a lot of veins, porphyritic veins, which include A veins and B veins in some cases, and a real increase in the number of copper showings that we're getting associated with certain areas within the lower valleys. And then quite recently, what we did is we flew. I guess all that work kind of came down to the identification of one area, which we call the copper junction zone. And that has a prolific amount of copper showings, which range up to 7% copper, all sort of grab samples on surface, either from outcrop or from scree and float. A good alteration in this area, as I mentioned, and then we flew this area with a ZTEM survey, and it just lit up as a real contained specific target that we want to chase, which is essentially it's I'm trying to think of the size here, but just give me a second. In terms of size, we're looking at 1 kilometer to 1,500 meters by about 5 to 800 meters in size in terms of geophysical target. And this is everything sort of kind of comes together after 3 years of work to identify this one target area as a specific drillable porphyry target. So our view of this is it needs a little bit more work before we get a drill out there. We're initiating IP surveys, pole-dipole IP survey in July. That will give us a better a drill targeting ability, and then we'd like to get in there and do some drilling this fall to see what this target is.
How advanced do you think this will have to get for a JV or another type of deal to be closed here?
This project has garnished the attention of many companies, actually, and many major companies. And we have a major company coming out to the property in July as well. It's got all the earmarks, all the things we look for in a porphyry epithermal system. So I think in most cases, the major companies want a little bit more proof of concept, which means a drill hole, demonstrating that this is a mineralized anomaly. At that point, I guess there's the opportunity to entertain offers, but at the same time, there's also the opportunity to move this ahead ourselves as our key project.
So what do you want to drill this year? How many holes are you thinking? How deep do you go, and so on?
Yeah. So we anticipate, based on our geophysical modeling, the ZTEM anomaly is subcropping, so it's below the glacial till. This is a semi-remote project. It requires a helicopter. It's 10 kilometers from a service road, and so we will get in there with a drill. We'd like to drill 3 holes on this, and those holes are anticipated to be about 500 meters long.
So when do you start? I think you had it in July in your presentation, if I'm not mistaken. I think I have it on here somewhere. Yeah, I think July is when
we've updated that timescale a little bit. And Tony, as you know, if you look at that, we looked to have financing in April, I think, right? And so everything's been sort of set off by 2 months. We're looking at the financing kind of occurring today, and we'll be getting in there to do the geophysical work in July. looking to move forward with drilling perhaps in September. Now,
Okay.
in terms of drill season, we want to be out of there by kind of mid-October, so it's quite doable.
How are the First Nation relationships here?
Yeah, so it's Tagish Carcross Tagish First Nation is the group there, and certainly all um, they certainly all the settlements, claim settlements have been done in the Yukon with them. We are engaged with them. In fact, I have an invitation to go up and dance with them this summer. So I'll look forward to that if that invitation still exists. I find them receptive and cautious, cautionary on certain aspects, but a very strong relationship, and we'll continue to communicate with them on a regular basis. In fact, they'll be aware of everything we're doing up there.
No concerns, though. You think you can just go ahead and do that work? No more paperwork needed before you can go up and do the geophysics?
We do have our permits in place, so that's all a go ahead to do the geophysics and drilling. We will be engaging with First Nations and having they've had their opportunity to comment on the permits and we'll be engaged with them and communicating them on a regular basis.
You also just secured a uranium play all the way up in the Northwestern Territories. Yeah. What's the plan there? When do you go up there?
We're not going up there. Well, you know what? We're going to go up there this year. We're going to go up there and we're going to do a bit more work, look at the old drill core. This is a project that has been on in my crosshairs for probably a decade, and you know, I just think this is a tremendous opportunity in terms of a new district play. Now, it still has a level of concept associated with it. If we look at I sort of view it as the Athabasca Basin back in 1960, maybe a little smaller, but all the earmarks of the eastern Athabasca are there, where we have a major crustal structure that's riddled with root vein deposits all along its significant length to the north of where our property is. In fact, there's been uranium production has come out of Ray Rock and El Dorado mines along that trend. And I believe it was the El Dorado mine that actually provided the uranium for the Manhattan Project, which dropped the A-bombs on Nagasaki and Hiroshima. To the south, in an area that's covered by Phanerozoic and Quaternary rocks, there's a sedimentary basin that was the Proterozoic sedimentary basin that was discovered by the GSC through their research back in 2007. Anglo went in there in shortly thereafter, I think 2010, and did a fair bit of work on this to confirm that those red beds are there. Compilation work, and there's one outcrop of Proterozoic sediments that are very similar to the Athabasca Basin. So along this Wapme Fault, this large crustal structure, this is the only area that still has remaining overlying Proterozoic sediments and offers the opportunity for unconformity style uranium mineralization. That's what makes it really exciting. But again, it's at the concept stage. Our plans for this would be to find a partner that wants to take this on. It's big district scale. It requires large airborne surveys and drilling. If we were to take this on ourselves, we would have to come up with a fair bit of dough to be able to do that. And at this time, with our focus at Pike Warden and Saturday, it's unlikely that we would be able to do that effectively. So this is a good one for a partner to come in and visit and take on. And our exposure on this is not a lot right now, so it can be a great deal for somebody if they're interested.
Well, you compare this to the Athabasca and the Thelon basins. Yeah. Historic work only showed those root-style vein showings, essentially. So no high-grade unconformity hits, I suppose. So what's convinced you that the system didn't sort of vent its uranium before any Athabasca-style trap could form and keep it where it came from?
Okay, so sure. So, I mean, this whole district would have been covered by this sedimentary basin, which now results in outliers of the Athabasca Basin, Thelon, Hornby, and so on. This particular outlier or remnant of that basin has not been discovered, not been recognized in the past. So, along that full length of the Watmay Fault, which is hundreds of kilometers long. It's the only remaining area that has any cover, and it hasn't been explored for uranium. So it's the geological model and the geology that convinces me that there's the opportunity for unconformity style mineralization there. There has been um, a few drill holes that were done, historic drill holes that were done there that a couple of holes for oil in the Paleozoic rocks, and then a few holes in the Proterozoic rocks done by Gurley Gold back in the 90s. And in those ones that went through the Proterozoic, they did identify the Athabasca style sedimentary units as well as the unconformities. So, I mean, it does exist. It is the place to look. If you want to look along the Watmay Fault, which would be identical or similar to the P2 fault in the Athabasca, and you want to find an area that still has the cover of the Proterozoic sedimentary basin, that would be the property that we hold.
I think Anglo American worked on it a while back as well.
Yeah.
What work did they do? What did they find?
They did an airborne survey and a compilation, and I was engaged with one of the a retired Anglo geologist that actually helped identify this for us, and he was he was disappointed that Anglo hadn't taken it forward. So it was just one of those ones that fell through the cracks, and we were able to acquire it.
How are the first relationships there?
Yeah, yeah. Oh, how are the First Nation relationships?
Yep.
We haven't started that work yet. If I have to be honest with you, we've just picked this up, as you can see, and there is a First Nations group just to the north of the property, about 20 kilometers from us. Um, so that's yet to be seen. Obviously, any group coming in here to take this on would want to kind of engage with them, and it's part of our business, and we haven't initiated that consultation process yet there.
Right. Well, so we've talked essentially about three assets. What else should we be talking about? I mean, a lot, but what else is on your mind? What else are you working on right now?
Yeah, so there's two projects there that would also be of interest to us to invest our money in. And one of the key projects, one of the better, I like to say, one of the better gold exploration projects that I've seen in a long time is called our Highland project in Nova Scotia.
Mm-hmm.
Now that project is a large land package. We view it to be in the Avalon sequence, which includes the gold deposits in Ireland, Newfoundland, through Nova Scotia, through New Brunswick, and actually down into the Carolinas, where Oceana's operating the Hale mine. It's all probably the western side of the eastern African gold belt, as the oceans split apart. And there's a large section of this Avalon that hasn't been explored in Nova Scotia. We were able to pick this project up back a number of years ago, and the project has about 30 gold showings on it. It's in the highlands of Cape Breton. It's raining gold down off of the highlands into the streams and in the sediments and in the tills, and we've done some drilling there in the past. And the best intersection we had there was 9 meters at 23 grams, and that corroborated with a small mom and pop bulk sample of that showing that had been taken a few years earlier, which was 20 or 3,000 tons of 26 grams. This is a large-scale gold project that really has got us excited, and we haven't been able to work it for a number of years due to permitting issues in Nova Scotia. those permitting issues are seem to be resolved with the new government there. And there's a lot of encouragement that suggests that we'll be working there again next year. So that's a key project for us, and we think it's just a dandy in terms of a gold project. The other one is our Galganda project in the Shining Tree area of Ontario. That was a gold project, large scale system gold project that we worked back in the 2010, 2011 era. It's gold associated with the Rideout structure, which is a large crustal structure similar to the Cadillac break, which has been underexplored through the years. It's the same break that hosts the Juby resource, and as well as I Am Gold's resource further closer to Gogama. Uh, we have widespread gold mineralization, lode gold mineralization in Archean rocks in a window of Archean that's poking through the Nipissing sediments of the Galganda silver camp. We also have silver claims there and associated with the Galganda camp. And we like this project in terms of carrying out work. It'll be one that we'll be developing plans for over the next few months and looking to reactivate that in 2026.
Hmm. Interesting. So, what else do you think is going to happen in 2025? Though, what do you think the next news release is going to be about?
Next news release will be that we're activating our Pike Warden project. We've activated crews into in there. We'll have results coming out of that midsummer to late summer, and then further work if we the decision to go and drill will be then made, and we'll hopefully get news release out on that in late summer, early fall. In terms of other things, there's a number of people looking at other assets of ours. We could be, should be some news out, as I mentioned, soon on our transaction we're doing on a sale of one asset. We hope to be able to sell additional assets as well. So those are some of the key news flows items that will be coming out over the next few months here.
Hmm. How do you market a prospect generator slash Explorco at the same time, given that there's so many projects? You know, if it was just an Explorco having one project, you go out and talk about that project as much as possible. With you, it's, as I mentioned at the beginning as well, many different metals all across Canada, different geologies and everything. How do you effectively package it into one thing and then market that story?
I think you've got to, at this stage, we've got to really focus our marketing on the projects that we're working, right? Rather than some of the other things you'd market in terms of a project generator, which would be, capital, capital structure, access to many opportunities, many irons in the fire, low risk. Those sorts of messaging is probably less important in this market than where we're going to go and drill a significant copper intersection in the Yukon. I think that's how we're going to target our messaging, is more project based. Companies and as people dig into the company, they understand we've got quite a depth of assets and depth of opportunity, which would enhance our investability. But certainly the marketing messaging will become more of a project based opportunity, I think.
How much money are you planning on spending on marketing this year? You mentioned earlier that you want to increase that spend. What's the budget?
We haven't got that worked out yet. This one transaction we're working on right now is paramount to getting that done. But in my estimation, we'd be looking in the neighborhood of $100,000 to $120,000, subject to a management board approval for the balance of the year.
Right. What are you planning for G&A? As I mentioned, over the last 6 months, over the last reported 6 months, it was about an average of 40,000 a month. Where do you think that's going to end up being for the full year?
The only real addition to the G&A component will be marketing, which we've really pulled back the throttle on over the last few years. If you're going to continue, if you're going to carry that in the G&A side of the ledger, but our G&A has been relatively fixed through time. We have our regular, public company components, our auditing components. We have professional services, legal, as if we're able to do more deals, that just costs a little bit of money. But other than that, I don't foresee any significant increase in fixed G&A.
Hmm. Good. Well, it'd be good. It sounds like there's I wrote down a bunch of things, so it sounds like there's going to be a lot of opportunities to have a follow-up interview in the future and talk through the different projects. What do you think I'm forgetting to ask you here, though, for the introductory interview? What did you come here hoping to talk about that I failed to bring up?
No, I think you hit most of the issues. I guess this will be edited. I don't. I didn't expect all those questions, but I mean, I think they're really great questions. I think you're an excellent interviewer, so that worked out well. In terms of other options, no, I think we've covered everything. We talked about some of the other projects which will become more important next year. And we talked about the projects which are going to be available for option. And the emphasis on tight capital structure is something that we're quite proud of, and I think you kind of touched on that one as well. So I think you did a good job.
Well, thank you. I really appreciate you saying that. And we typically don't edit these down. I mean, this is going to be published in its full form. We do add some visual stuff to it, of course, but we don't edit the length of it. I appreciate going in depth. This is kind of that's what I like about these interviews, is that I get a lot of time with the executives, and we get to talk through topics that typically don't get covered in your 15, 20, 30-minute interviews. So that's what I do like about it. Nothing's really ever perfect, though. Everything's got risks. I think we did talk about a lot of the challenges here that you have for the company. What keeps you up at night, though? What's the thing that you think about solving the most?
Yeah, I mean, over the last few months, or I guess more than a few months, it's really just been the vision for the company, given our treasury, and result and really kind of resolving that, we're going to have to dilute the capital structure of the company after all these years. So I think that was the main issue, and I think we've kind of dealt with that nicely now. So I'm sleeping better these days. And I think we've got some good runway ahead of us to really kind of just get excited about projects again. I've been, when I've been lying in bed, I've been thinking about, company are we gonna, what's it gonna look like from a year from now, and are we gonna be able to, keep our employees fully engaged, et cetera, and excited about our company. That's a big thing, is morale of the group, and now that I think things are on a better keel right now, my sleep patterns are going to become a lot better, and we're going to get to now really focus on what we really love doing, which is working these projects out and making discoveries, which we've proven we can do.
I really appreciate your time here, Scott. It's been a pleasure talking with you. And if I am forgetting something and people are watching or listening here and they think there should be something else we should talk about in our next conversation, they could put it in the comments or reach out to me directly, and I'll make sure to ask Scott about it next time we speak. But Scott, really thank you so much for sitting down with me today. Appreciate your time.
Oh, thanks for having me. It was great chat.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know, and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should under no circumstances be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. Oh, so unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find a company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."